Good morning, students. Welcome all of you to today's accountancy class. Today we'll discuss the topic source documents and journal. Before going to the journal, we'll discuss on source documents. So, rule of accounting we discussed in the last class. So, rules of accounting is required to write journal entries. Okay. So, there are three different types of rules: real account, personal account, and nominal account. So, real account rule is debit what comes in, credit what goes out. And personal account rule is debit the receiver and credit the giver. A nominal account rule is debit all the expenses and losses, credit all incomes and gains. So this is the rules we follow in the double entry system of bookkeeping, so that each item will be entered two times. Matlab the amount will be entered in two accounts. So it have a debit aspect and a credit aspect. So all those things we discussed in the last class. So today, before writing the journal, before how to record the transaction, before going to that problem part, just we discuss on source documents, because this is very important. With the help of these source documents only you can record journal entries in a business. So first we discuss on this, then in next class we discuss the problems related to writing of journal. Okay, so first we'll see what do you mean by source documents. So these documents are the first record about the details of a business transaction. So any transaction, any business transaction happen, so first you can go and check where the source documents. Suppose sold goods, what is some evidence will be there, some receipt, some paper will be there regarding the sale of goods. So you purchase machine, or you paid salary, that salary slip will be available. So some documents or some papers will be available to support that transaction. So that is known as what? Source documents. So these documents are the first record about the details of the business transaction. It contains the date, the amount, parties involved, and the nature of the transaction. So if you check it, if you check that paper or document, it will contains what? Date. So date of transaction will get, amount of transaction, what is the amount involved, parties involved from whom we purchased, and the nature of transaction, what is the nature of that transaction, means cash transaction or credit transaction. All those details will be available in source documents. For example, if you are going to a shop and purchasing some goods, when you make payment, what they will give you? Cash memo. So you may not be noticed in the previous days. So now you become a commerce students and now you can check it out. Okay, so when you purchase something, normally some shops and all, they give you bill and a cash memo along with that. Okay, so if you are making ATM payment or card payment, ATM card payment through, or debit card, card payment on the point of sale terminals. So immediately they give you a slip for the transaction that you have done there. Okay, so if you read that, all these details will be there. The amount will be there, the date will be there. Usually we will fold it and throw it away, but now onwards you check it. Okay, according to the principle of verifiability, each transaction recorded in the books of accounts should have adequate proof to support it. So, whatever we record in the books of accounts, so simply you cannot say that an or accountant or the owner cannot say I purchased this much, or I spent that much money, I paid this much money to that person, or I received that much, like that. No, simply we cannot say. It should be supported by proper evidence, or proper proof should be there. So one principle is there, that is principle of verifiability. So according to this principle, each and every transaction should be supported by a proof. Okay, suppose you are saying I paid salary, then that employee is saying I didn't get salary, then who is correct? How will prove it? So there should be some evidence. So that evidence we have to keep always in when you deal with the money. So if it is your own money, you are not involving with other parties, okay, leave it. Our own money we are spending, no need to keep any records, we are not answerable to anyone, means no problem. But when you run a business or when you run an institution, even for our school also, you see, okay, school also dealing with so much transactions, so many transactions are there, money they are dealing with. So where that money is spent or how they are spending, what is the evidence of each transaction happening. So even the school is not a business organization, even for business, non-business, service, any organization you take, wherever money is involved, then we have to keep a proper records proof. Okay, so these documents are required for audit and tax assessments also. So later on, audit people will come, so they will see that, okay, one furniture is there, so what is the proof of for that the furniture is purchased or somebody has donated you. Understood? So sometimes people what do, they take donation from other people and they will show that in the books that they purchased from someone, okay, that much cash they will take away. So these type of malpractices, cheating, misappropriation of funds can happen. So we have to avoid those things. That is why each and every transaction should be supported by source documents. Okay, now most common source documents. So if you analyze, no, we can see all these type of source documents. Actually we are dealing with it, but usually we will not read it, that is why we don't know. Okay, so now onwards you check. One is cash memo. When a trader sells goods for cash, suppose now we are not selling any product, you are customer, we all are customers. So when you go to shop, okay, and you purchase something, then he gives a cash memo to the buyer, and when he purchases goods he receives a cash memo. Yes, when this trader sells goods, he gives a cash memo to the buyer. So buyer, you are the buyer, you are purchasing something, suppose you purchased a textbook, so for the evidence of that they will give you a cash memo. So you must have noticed they keep a carbon copy in a book, like what, one receipt book will be there. In that they will write with carbon copy, means one copy will be in the shop, another the main copy you will be getting. So from that they will be understanding. So at the end of the day, if they check all those carbon copies, they will get a clear idea that what, how much sale is done on that particular day. Understood? So that is cash memo. So cash memo, if a seller is selling goods, he is giving to the buyer. If he purchases goods, he will be getting the cash memo from somebody else. So usually for this, what, cash transactions, cash memo. Then next is invoice bill. Invoice bill, invoice, best example I can say, you all may be purchasing goods through online. So when you make online purchase and it is cash on delivery, then it is what, actually it is what, credit transaction. So when you are making the order, when you confirm the order with that online business party, so you are opting cash on delivery. So when you opt cash on delivery, the transaction what you have done is credit transaction, means you have not paid money. Later, after receiving the product only you make the payment. Okay, so immediately they will make what, invoice, invoice bill they make. So for credit transaction it is what, invoice bill. So for cash transaction it is cash memo. Okay, so when products arrive, no, you, the one paper will be there on the top of that packet. So you can check next time onwards. So this also contains the name of the party to whom the goods are sold. So to whom we sold the goods, that person's name, the rate, quantity. So how many, what is the rate of the product? Suppose you purchase a mobile phone, then what is the quantity of number of items there, one or two, then what is the rate of that mobile, then the total amount of sale. So into rate into quantity will be the amount, so multiply and then amount will be there. So all these details we can see in the invoice bill. Clear, no? Okay, now next is Receipt. Another voucher source document is receipt. When a trader receives cash from a customer, he issues a receipt containing the date, amount, and the name of the customer. Suppose some customers will not pay money on the same day of sale. Okay, it may be a credit sale. So later, after some 2-3 days, he is coming back. That customer is coming back and giving the money to the trader. That time the trader write a bill, that is called what? Receipt. Okay, so if say cash memo, remember cash memo is happening when the same day sale and received money also. Okay, or the same day purchase and we are paying money. So in whenever cash is directly involved on the same day of transaction, then cash memo we can say. So here we are not transaction is happening, but here they are getting money, receiving money from that particular customer. So we'll pay what for that proof is receipt. Understood? No, in each situation the source documents will differ, that only, but all these are source documents. Now next is debit note. So what is debit note? When we return goods to the supplier, that is called what? Purchase return. Okay, so you know, whether for the purchaser or for the trader, for the seller, he purchase then he sells. So he purchase from someone. That person, suppose A is the trader. Okay, so he purchase from P. So he P is the purchaser for A and he sells to C, customer C. Okay, so he is the trader, this person. So he purchases then he sell. Okay, so both the activities are done by this trader. Okay, so when he purchases, suppose 100 what umbrellas he purchased from this purchaser or from his purchaser or the supplier. So 100 umbrellas he purchased, then he sells those umbrella to different customers. So out of these 100 umbrellas, 3 umbrellas are damaged. Okay, not in a usable condition. So what he will do, this A trader, he will return back that 3 umbrellas to his purchaser or the supplier. So 100 he purchased, 3 damaged, that is 3 he returned back. For this A, it is what? Purchase return, because what he purchased he returned back. Okay, in the same way, so then that time he prepare a note, that is called what? Debit note. Means he will say that I purchased from you this much, but now your account is debited this much. Means that will reduce. Okay, 100 umbrella he purchased from this person. Now he is returning back 3 umbrellas. So that 3 umbrellas amount he has to reduce and tell the A that okay, you can debit my account with these 3 umbrellas. Okay, so that is called what? Debit note. So debit note we use when there is a purchase return. Okay, so there also it contains date, name of the account debited, the amount, reasons for debit. What is the reason for debit? Now the damage. Okay, damaged product or product spoiled or not according to the quality expected. Like the different reasons we can show before returning. Okay, in that note itself we will mention that. Understood? No, that is purchase debit note. Now next is credit note. Credit note is what? When suppose he sold 5 umbrellas to a customer, then that customer returned 1 umbrellas to him. That is called what? Sales return. What we are selling, what the trader is selling, and it is coming back, then it is sales return. So when sales return happens, the trader will write. So remember all these things, who is writing? The trader is writing. Okay, for us the businessman is important, not the customer, not the purchaser or the supplier. We are standing in the point of view of businessman or the trader, and then we are writing. Okay, so credit note, then we prepare a note. That note is called what? Credit note. So remember, debit note in purchase return, credit note in sales return. Okay, next one is pain slip. So pain slip, if you have gone to bank, when you want to deposit money into the bank, no other option, you are not using any net banking or any other options through app and all, then you can go directly to bank. There will be a slip or a paper they will give you. You have to fill that slip and deposit, give it to the bank. Suppose 1000 rupee you want to deposit in your account or somebody's account, no problem, you can fill the pain slip. Okay, so your account date, name of the account holder, how much money you want to deposit, all those things you can write. So in pain slip, two sides will be there. One counter foil, we can fold it and tear it, that part will be there, and one part we will give it to the bank, the main part. Okay, the lengthy one will be there, that we will to the give it to the bank. The other part, no, that is counter foil, they will give us back. Okay, customer copy, they will stamp it, what received करके एक stamp डालेंगे, then they give it back. Okay, so that also what pain slip. So for bank also they can verify, for us also we can verify. The main part we have handed over to the bank, so bank will check or bank will verify according to that paper. Okay, so that is why whenever you deposit money or do any transaction in bank, they you have to fill something in a paper or in a format will be available there, then only they will accept money. Simply if you give money to them and deposit in my account, if you say, they will not accept it. Okay, so deposit, cash deposit machines are there also, you go, you can insert your notes in the that machines, it will accept. But last you will get a receipt there also, how many number of notes, total amount you invested, okay, or deposited, that will get. So all these type of transactions are supported by a proof or a document, that only what source documents. So actually without the source documents you should not carry out any transaction in with any outside parties or inside parties. That is the rule in accounting, that is the safe. The next one is check, you know. Okay, check we can use to deposit and also withdraw money. Okay, so check is an order in writing drawn upon a bank to pay a specified sum to the bearer or the person named in it. So check how will work. Check, you know, in check we write, if a name you write, that person will be getting the money. If you are not writing the name, then the person who is carrying the check to the bank, that person will be getting the amount. Okay, so these also contain a counterfoil. Here also one side, one smaller side will be there, that side we can keep as our copy for future reference. Okay, so this pain slip and check usually we deal with banks. For bank transactions we use it. Now next one is vouchers. So source documents, vouchers are same only almost. So on the basis of source document, entries are recorded in the vouchers, and then on the basis of vouchers, recording is made on the journal. Yeah, that only the difference. So basis of source documents, we prepare what vouchers we make. Then based on these vouchers, we make what journal, recording journal. So actually we have to do only journal part, but before doing journal, you should know about source documents and voucher, because with the help of source documents and journal only we will prepare the journal. With the help of source documents and voucher only we'll prepare the journal. Each voucher specify the account to be debited and credited. So when you prepare, each business organization they can make vouchers. Okay, so vouchers will clearly mention which account is debited or which account should be credited. Now um, types of vouchers. So different types of vouchers are there. If you have a APC textbook, different types of vouchers, how to make those vouchers also given in your textbook format. Okay, copies, specimen copies or format is given, you can refer it for what better understanding what are the things included. So first we can classify cash voucher, non-cash voucher or transfer voucher. So cash voucher means for cash receipts and cash payment we can use it. Okay, from the name itself we can understand if you receive cash you can make a voucher, if you make payment of cash we can make a voucher. So that is called what? Cash voucher. Now cash voucher can be of two types: debit voucher and credit voucher. Cash payment, if you make cash payment then it is called debit voucher. If you receive cash then it is called what? Credit voucher. Okay, so when you make payment of cash then it is debit voucher, if you receive cash it is credit voucher. Then non-cash vouchers, so these are for non-cash transaction. Non-cash transaction means transaction is happening but cash is not involved, means credit transactions. Okay, sold goods for credit means we are selling goods but we are not getting money. Purchase goods for credit, we are purchasing goods but we didn't get money, we didn't pay money, so that is called what? Credit transactions. So non-cash vouchers. Next is compound voucher. Compound voucher means there may be multiple debit or credit. Okay, so sometimes more than one debit or more than one credit is coming, that we can combine and write, that is called what? Compound voucher. Okay, so debit voucher, in this also we can say debit voucher, so contains multiple debit and one credit. So two items debit and one item credit, that is called what? Debit voucher. Debit part more than one is there. Now credit voucher means two part credit, two items credit and one item debit, that is why it is known as what? Credit voucher. Okay, so these are the types of vouchers. So different vouchers, it is given in your book, you just to go through that. Okay, now we'll go to next part, books of original entry or journal. Okay, so source document or vouchers just for reference, just to understand what it is, why it is used, all those things. So these source documents or voucher will give you a base for preparing what? Journal. So journal only known as what? Books of original entry. The first process in accounting is starting where? In recording of transactions. So we already studied in the definition, accounting is the art of recording, classifying. So recording of transaction will happen where? In the journal. So journal will see the meaning, the books in which the transactions are recorded for the first time from the source document is known as books of original entry or journal. So source documents are already available. With the help of that source documents, the entries are journal entries, means debit aspect, credit aspect. With the debit credit we write the journal, that is called what? Books of original entry, because it is recording for the first time, that is why it is known as books of original entry. This is prepared on chronological order, means it is prepared on date wise. Okay, today when we open the show, what is happening first, that will record first, then after that what? After, like that it is, it will be written or date wise. So first date will come first, next will followed by other dates. When size of business is small, then recording in journal is possible. Like accounting equation I told you, no firm or business will be writing in accounting equation. Okay, just for a beginners, they should know that, that's why we studied that. Like that, for a small business organization, date wise we can write and keep. You think about a large size organization where 1000 2000 transactions are happening in a day. Is it possible to write in chronological order? It is not possible, but now everything computerized, so it is very easy, and even journal is not required actually speaking, only you have to create accounts and all, that softwares will do everything. Okay, but we should know what to create, how to analyze the things, and all for that theoretical knowledge is required. But when the size of a business grows and it is not possible to record journal, for that we have to maintain sub journal. So when business grows, you will not be able to write all those transactions in a chronological order, because numerous number of transactions will be there in the business. Okay, so when the size of business grow, what to do? Usually we have computer center came very recently, some 20-30 years back only, and it is very famous, or all are using it on a larger scale only in recent years. But before that, journal we used to write in all business organization, and if it is a large scale organization, large size is very big, then they will make this journal into different subdivisions. Okay, means nothing, only the same category of items we put in one particular journal. Okay, suppose purchase, all purchase will go to purchase journal, all sales will go to sales journal, like that. No, same category of, or the repeating nature of items, or all cash transaction will go to cash book. So cash book is a journal, purchase book is a journal, sales book is a journal. So when you maintain cash book separate, purchase book separate, sales book separate, so that fulfills the purpose of journal. No need to prepare, or no need to write sale करके ना, every day no need to write. So every day you can directly put inside that sales book or purchase book or cash book. Understood? So that, for that purpose only, so to keep the things easy, we have made the journal into different subdivisions. Okay, sub journals. So that is known as special purpose subsidiary books or books of original entry. So different books are there, same category of item we can put inside that book. Okay, so this is what subdivisions of journal. So subdivisions of journal: cash book, purchase book, all cash transaction will be in cash book, all purchase will be in purchase book, all sales will be in sales book, all purchase return, so if we purchase and return it back, that we can show in purchase return book. If sales return by the customer, sales return book we can write. Bills receivable book, if we have to get money from the customers later, for that bills receivable. If we have to pay to outsiders, then bills payable. Then journal proper. So journal proper, if any transaction is not falling in these 7 books, then we can write journal, normal journal, debit credit journal we can write. Okay, so these are the subdivisions of journal. Okay, this we will study in detail later. Okay, now journal format, just I will show you. Journal contains this many columns. First is date, next one particulars column, next is LF. LF means ledger folio. Okay, so that I will tell you after studying ledger, then only you will understand. Then amount debit and amount credit. So debit amount will be here, credit amount will be here. So here one item we write account debtor to, in the previous class I told you, no, one item. So debit will be here, credit will be in the next line. So this way we'll post the items, write the journal. Now before going to journal, one more thing we discuss and finish today's class, and the next class will start our journal. Okay, so we'll think about or discuss about something about goods, because goods are in different forms in a business. That is why it should be very clear for you. Okay, so goods are those things which are purchased for resale. So whatever you purchase in a business for selling it, then that items only called what? Goods. In other words, goods are the commodities in which the business deals. Suppose I am a cloth merchant. What is my goods? Clothes are my goods. Okay, I am running a vegetable shop. Vegetables are my goods. If I am running a tea shop, tea I am serving to the people, or snacks or other eatables I am serving, that is my goods. Understood? So if a cloth merchant purchase cloth, the cloth will be termed as purchase. Yeah, the goods which we are dealing with is known as goods. But अभी देखो goods का नाम change हो गया. When you purchase goods, you should not say it as goods. What you have to say? Purchase. I made purchase. The trader will say purchase rupees 10,000. He will not say goods rupees 10,000. Understood? That is why we are discussing this. But if the cloth merchant purchase some furniture, say chairs and sofa set for the seating of customers, suppose a big textile shop is there, he is bringing clothes, then that is termed as purchase. He purchase clothes today, tomorrow, every day he is purchasing. So that purchase will go to purchase book. Okay, that is termed as purchase. If the same trader is purchasing furniture, that also purchase only, no, but furniture is not for resale. Clearly differentiate and understand. Furniture is not for resale, that is for use in the business. Okay, so what is goods is depends on the nature or type of business we are dealing with. Okay, I think in the business basic terms of accounting I told you this. So in this example we can say in another way. Suppose a furniture showroom owner, he is purchasing furniture, that is purchase or not, because that is goods for him. Okay, so goods means what? The items which the business is dealing with, that is called goods. So furniture shop owner purchases furniture means that is goods for him, that is purchase for him. Okay, but a cloth shop owner purchase furniture, then that is asset for him, not goods or purchase. Okay, say chairs, say sofa set we are arranging in a textile shop, all those are for use in the business. So already I told you what items are for use in the business, that items are known as assets. Okay, the furniture so purchased will not be termed as purchase. So furniture purchased is not purchase, but these are assets of the business and it will be debited to furniture account. So whenever you purchase goods, then it will go to purchase account, purchase account, purchase account, we will write. But when you purchase an asset, it will go to that asset name only. Suppose you have purchased furniture, furniture account will be opened. If you are purchasing machinery, machinery account. If you purchase land and building, land and building account will be opened. Okay, so when goods are purchased, that will go to purchase account, remember. Now classification of goods, another other things we'll see. Goods account is classified into 5 accounts for passing journal. So when you pass journal entry, you should remember this. Purchase account. First is what? Purchase account. When goods are purchased, purchase account is debited instead of goods account. So already I told you, when you purchase goods, transaction में question में purchase the goods बोला तो which account you have to open? Purchase account you have to open. Don't open goods account. If you write goods, it is wrong. So purchase account is what? Nominal account means expense account. Debit all expenses. So purchase will be debited because purchase is an expense for the firm. When you purchase, you are spending money. That is expense for the business. So you have to debit it. Then sales account. Sales account, when goods are sold, there also don't write goods. You have to write sale. So when you purchase goods, you write purchase. When you sell goods, you have to write sales account. Okay, so sale account will be credit because it is income for the business. When you sell product, you will be getting money, so it is income for the business. So it is known as what? uh, Credit all incomes and gains. That rule we have to follow. So sales will be credited, purchase will be debited. Reason understood? No, these both are nominal account rule we are applying here also. Now purchase return, you know. So purchase return means what we purchased we are returning back. So purchase return will reduce our purchase. That means purchase rule what? Debit. Then purchase return rule will be opposite of purchase, credit. Okay, so purchase will be debited, purchase return will be credited. Same way sales return. Sales what? Sales is credited, but sales return will be debited. Opposite, no, purchase का opposite है purchase return, sales opposite is sales return. So what rule applicable for purchase? You have to reverse it for purchase return. Same way sales return. Okay, now another thing related to goods are stock. the unsold goods at the end of the year. That means 31st March is the end period. That time, how much goods are unsold or lying unsold, that is known as what? Stock. That we call it as closing stock. On 31st March, we call it as closing stock, and on the next day, it become opening stock. Okay, so these are the things associated with the goods. So you have to remember this. Okay, so purchased goods, sold goods, returned back, or goods sales return or purchase return, like that words are there. These are all related to what? Goods only. So, but treatment is different, so that understand it very clearly. Okay, now cash transactions and credit transactions. Purchase and sale of goods can take place either cash transaction or credit transaction. So these goods, when you deal with goods, can be cash transaction or credit transaction. So cash transaction means, purchase goods for cash, sold goods for cash. Purchase goods on credit, sold goods on credit. So how to understand a transaction is cash or credit? This example you see. Goods for rupees 10,000 sold for cash. So here cash word is there. Then it is what? Cash transaction. Correct. Goods for rupees 10,000 sold to Anil. Here cash word is not there. The name of that person is given. So when name is given and cash is not there, then we can say that person has not given money. So when paisa mil gaya to person is not important. Okay. If money is not received or paid, then that person is important, because you have to remember the person's name. He has to pay you money. Understood? So then it is what? Credit transaction. So how to identify cash transaction? Cash word will be there, name will not be there. But if name is there, then it is credit transaction. Now you tell me, both are there in this goods for rupees 10,000 sold to Anil for cash. Anil name also there, cash also there. Then how to identify it? Then it is what? Cash only. For cash bola na. So when cash is involved, then it is cash transaction. So goods can be sold at cash or credit. Goods can be purchased at cash or credit. Okay. So this much only. So these are the items, or these are the things you have to go through before going to our real process of accounting, that is recording of transaction journal. Okay, so thank you so much. This much only for today. Next class we will start our problem part journal. Okay, thank you so much. Revise it, understand it, ask your doubts. Okay, bye, take care, see you.